Greetings. Thanks for joining me today. It's always a pleasure to see you here during this weekend market recap. I am Sagar Nandi, retired IT professional, swing trading stocks using Q systems and techniques that I developed. I trade in the USA market as well as some global markets. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. I try to share trading ideas where all the market dimensions are in favor. That includes the technical strength weakness, market direction, and my preferred trading direction, sector industry rotation, fundamental strength weakness, and sometimes even seasonality. Because I combine as many of these dimensions as possible, align them with my trades, they tend to be truly high probability trades. And if you watch my ideas that I share on YouTube channel or my forum on my website or Twitter X, you would know that they tend to be truly high probability trades. Most of them end up with a profit. And the secret is I use this multidimensional analysis and I look at the market like a child does. I look at it as it is. I don't try to apply my own judgment on the market. Own judgment about what? About how the economy is doing, how different global events may impact the market, how recession is coming, when it is coming or not, things like that. I just look at the market like it is and try to take my trades in the direction of the market. That is one reason I think my trades tend to be of a higher success rate than many other traders. And you will notice that in these YouTube videos as well as in all my other sharing, I never talk about economic events, global events, etc. It is not that I don't only share during these sessions, I don't even consider them as important for my short-term swing trading. I think the multidimensional analysis that I carry out will give me enough edge to take trades in that direction. We'll try to see if there are trades following the same analysis in today's session as well. We'll try to find that. I use the Q systems and only Q systems in my trading. Q has many components. All the components run on the Metastock platform. So if I am trying to use only one system, then I use Q on Metastock. The technical analysis component also runs on TradeStation, which is a powerful analysis platform for technical analysis. Sometimes for trading in the USA market, for technical analysis part, I use TradeStation as well. But the other analysis can be done only based on Metastock. Let's look at the global market now, but before that, have a look at the dollar index. From the long-term trendline support, dollar index went up, and I knew and I shared it publicly that at this point dollar would find it difficult to fall sharply because there were multiple trendline supports and those were very long-term supports. They hold quite well. And today, if you see, if you may go back and watch the video of those periods, today we see that it has in fact held the trend line support, went up and then stopped at the trend line resistance. The Q memory trend lines worked once again, both at the support and also near the resistance. If we look at the daily chart, it cleared the congestion area here with a bullish candle. That was last Friday, 1 week ago. Though dollar went up, contrary to conventional wisdom, several market ETFs also went up at that time. And I mentioned in the previous recap that the conventional wisdom was not working. That is one reason I don't rely on intermarket analysis to decide my trades. After that, we can see that dollar is holding the gain, meaning it broke out of the narrow range, broke out of the squeeze, pulled back little bit, but it is holding above the narrow range. So the breakout of the squeeze is holding. Friday's candle is indecisive, doji-like candle. If it breaks out to the upside, that will be again bullish. If it comes down, closes inside this congestion area, that will be non-directional, not necessarily bearish. It will be non-directional because it will come back to the congestion area with a false upside breakout. If it breaks to the upside, that may put pressure on the market, but that didn't happen here. So that's why it is important to know the limitations of intermarket analysis. That is to look at dollar, how it is moving and trying to anticipate how the stock market or pockets of the stock market will do. But I do keep an eye on dollar index and I will see if it goes to the upside. Now, one thing to remember that in this area, dollar broke out of the congestion. And yes, part of the market, SPY, QQQ, for example, did not come down, but several stocks came down. Market breadth was very weak, and we saw that in the market recap 1 week ago. Majority of sectors, industry stocks were down over previous 5 days, not now, previous 5 days. Though dollar broke out and SPY QQQ went up, majority of stocks came down. And now we see that dollar is moving inside a range, holding the gain. However, market went up. We will see it. Not only SPY QQQ went up, but majority of sectors, industry stocks went up this week. But that moving up of broad market happened only on Friday. Until Thursday, the broad market was actually weak. We'll see how the market moves and we'll look at those statements, why I made those statements. Broad market went up only on Friday as I progress in this session. I didn't look at the global markets for a number of sessions. Let's look at them now quickly. All ordinaries, Australian market. Made a new high, probably not all-time high. We can go back. Very close to all-time high, in fact. Very close to all-time high. This is what I wanted to show. Very near all-time high or at all-time high maybe on the high of the day basis, but it has a bearish headwind in the weekly. The previous time the bearish headwind came, a unique reversal signal that tends to come at the very top or near the very top. Very unique signal in that way. Last time it was able to pull down the market a lot. We'll see how it turns out this week, next several weeks. However, I will not look for shorts until this trend line support is broken, and also in the daily multiple trend line supports are broken. Those have to be broken for me to be bearish. But key thing to note that it is at jump thrust high and price extreme high. We actually have a big move down 3. Well, we have a big move down 3, jump thrust high, price extreme high. So I will anticipate, I will not trade based on that, but I'll anticipate that it is going to come down from here. But again, because of the trend line supports, I am not going to short all ordinaries itself. Now remember, this jump thrust high, price extreme high, then big move down 3 is not a trade setup. It is a pattern that has worked many times in the past, in the sense that after this pattern comes, if a trade setup comes, that has worked almost always. And almost always it also has pulled back after this pattern has come. So I am anticipating the market to come down. Topix index at all-time high, but we have bearish indecision in both weekly, daily. In daily, at the same level, bearish headwind had come earlier, approaching jump thrust high at price extreme high. Not a time I'd like to buy, because there are indecisions and headwinds, and it is at or near all-time high. And that is the point I want to share. If we look at India's Nifty 50, also very close to all-time high, but it is moving sideways for several weeks, moving sideways in the daily as well. We already had jump thrust high, price extreme high, big move down 3. So again, I am anticipating it to pull down, but market doesn't do always what I anticipate. I have to wait for a trade setup, and the trade setups on the short side will not come unless these trend line supports are broken in daily. But it is at or near all-time high. If we look at the UK market, FTSE index, this is a bit weaker one. If I scroll back, it is in a congestion area in the weekly, in a box range, sideways range. And again we see this unique bearish headwind signal with a bearish shape candle caught the very top. We had a bearish headwind earlier, but that candle shape was indecisive, and the second bearish headwind with bearish candle shape led to a drop. Now it is moving sideways. This week's candle shape and color both are bearish. Fell with very high volume with a bearish reversal at price extreme high in weekly. So if I am looking to trade, I would rather look for a bearish trade. However, not in the FTSE index itself, because it has trend line support nearby, and currently in daily it is right in the middle of the range. Middle of the range is a no trading area. I like to short at the top in a range bound instrument, buy at the bottom, but it is in the middle, no trading area. But looking at the weekly, I am anticipating it will come down, but again I will not trade. We have looked at Australian market, Japanese market, India market, all were at or near all-time high. UK is the only market which is not really near all-time high, but none of the markets are telling me to go long or short. Now, China market was opposite to all the markets in a way. So let's look at CSI 300, and I did mention China market in one of the earlier sessions. We will see how that analysis played out. What did I say when price came here. We saw price near jump thrust low, price extreme low, came big move up 3. And from then I mentioned that it is unlikely price will go down further because that pattern has worked over and over and over and over again. And it did try to go down again, gave a bullish headwind that caught that low of that down move, price went up, tried to come down again, came a bullish indecision cluster. One is important, two is much more significant, two or more, it's a cluster. After that, price went up again with big move up 3. If you notice where it was when the last big move up 3 came, price is very near to that level now. So if we had traded in individual stocks with proper trade setup, when big move up 3 at price extreme low, jump thrust low came, that trade would be preferably using short put vertical. Short put vertical is a trade where time decay is in our favor, and therefore those trades are most likely in profit by now. Once again, this pattern worked out, and this pattern that worked out in China market, opposite of that is true in the Indian market and several other markets we saw. That is why I am very cautious about buying. Even USA market showed that pattern, but USA market is being fueled by the mega caps. If you use the breadth indicators in Q Elite, where it shows what is happening inside the market in terms of advanced decline, up down volume, new high low, for all the pockets of small cap, industrials, Nasdaq 100, S&P 500, and even for whole Nasdaq composite and NYSE composite, we are able to see that in real time, and you would have noticed that for several days of the week, market breadth was weak. But the market ETF, especially QQQ, SPY, and on Friday even IWM went up. Let's look at the mega cap custom index. Look at it using weekly daily. Made a new all-time high. This week price went up, so the mega caps made a new all-time high. However, if you look in the daily, there are multiple headwind signals. You may also notice that none of the headwind candles have bearish shape. They are indecisive shape, and also we have multiple trend line support. So there is no possibility of shorting, but it is stalling while going up, meaning the force with which it is moving up is not so much as before. We also see a cluster of indecision earlier and now a cluster of bearish headwind. But I am not able to short because of the trend line support. So it is too high to buy and there is no short setup. If we now look at QQQ, which is most influenced among the major market ETFs by the mega caps, we would notice one thing immediately. And I switched from market mega cap custom index, not market mega cap custom index QQQ directly to show that QQQ weekly candle and daily pattern is actually stronger than mega cap. That means last couple of weeks QQQ was majorly driven by mega caps, but especially on Friday, other stocks also participated in the bull move. Doesn't make it very viable because it is above upper boundary at price extreme high. Big move down 3 has come earlier, but we are not at jump thrust high yet. So it has more room to go before it becomes so extended that a pullback is likely. That situation has not presented itself in QQQ. And we can see the weekly daily is actually more bullish than mega cap custom index. If we look at, by the way, we also know now because market is at a very high level, it's time to pay attention to some more details. It went up, but the volume is very low for the week. Doesn't mean we can short. There is no short signal at all. It is at all-time high. At all-time high, it is not possible to short. SPY also very bullish in both weekly, daily. Too high to chase for me and for I think many of the Q traders. This too high to chase SPY. That will be the case for many mega caps and many other stocks also. Dia, by the way, SPY also went up, but volume is much weaker than 1 week ago. Not that it is bearish, it's just something to note. Certainly not bearish. When price is making new all-time high, it is not possible for any interpretation other than a bullish interpretation. Now, DIA relatively is of course weaker because we see, unlike SPY QQQ, the backdrop color is yellow. We also have a bearish headwind. However, Friday's candle is indecisive, not a bearish candle, and we have trend line support. It is hugely underperforming the market. Underperforming is relative here. It is still bullish. It is very close to all-time high. Not possible to short, too extended to buy. IWM, this is something interesting. Let's look at it using TradeStation. We could use Metastock also, but I don't want TradeStation to feel bad. For several weeks, IWM was inside a box. And I remember I mentioned in the market recaps that I will wait to see which direction it breaks out. Downside would be bearish, upside would be bullish. Moved inside the range until Thursday. On Friday, right at the open, it went above the trendline resistance. That was a possible breakout buy setup. And if you notice, it also had a gap up open. If we look at it using the intraday chart, this was Friday's open. This was Thursday's high. So it opened with a gap up at the same time when it was breaking out of daily trendline resistance. So we could trade it either as a breakout long setup, that is a swing trade setup, expecting the breakout to be confirmed at the close of the day, which it did, or we could also trade it as a gap long setup. This is one example where a spike to the downside would have stopped us out if we placed a hard stop. That's why if I am day trading or many other day traders, they watch carefully to see if the stop is being hit. Stop would be a little below the early range low, or maybe in this case below previous day's close, which were very near to each other. In day trading, it is often possible that a whipsaw like this stops one out. That's why some traders, including me, would like to watch for the close to be below the stop, which was not the case, and then it went up again. Now if we applied a hard stop, we would get stopped out, then we could enter again here using the concept of flow long setup, putting stop using the Q protection signal, and that next entry would come into profit. I did not trade. I am not a day trader usually, but IWM, I came to this chart because we had a breakout setup, possible swing trade, as well as a gap long setup, day trade, near the open. Those are quite reliable buying situations with narrow stop loss, and that is the key. Even if someone got stopped out, the stop was narrow. Stop was narrow. In fact, now looking back, there was no clear breakout above the early range high before here. So if you were actually trying to take a trade using early range breakout, you would not be able to take a buy on this candle because it had a bearish indecision. After that, price pulled back, and this was the candle when it broke out of the early range with a bullish flow. So this is a bit of detail if one is day trading. To observe the signals in the morning session in 5-minute interval carefully before taking a trade. In any case, I'm mostly a swing trader, and IWM is now looking bullish both in the weekly and daily. Interestingly, once again the weekly trend line support held very well, and this is one technical pattern that I say one of the strongest buy patterns. What is that pattern? Support in longer time frame, breakout in shorter time frame. Support in weekly using trend lines, breakout in daily using trend lines. That is one of the most powerful bullish patterns. So going by that, see, again, I'm just thinking like a child. I'm not trying to impose my ideas about market, it is overbought or not. It is overbought for the other market it is, but this instrument, small cap ETF, has more likelihood to go up than stall or come down. So if I am going to buy, I would like to buy small caps now. That is my conclusion, because the others are too extended to the upside. And we can see for last 1 and 2 days, IWM is outperforming the market, and of course it is nowhere near, not there, sorry, not anywhere near jump thrust high. It was earlier, but it pulled back significantly. It's not even at price extreme high until Thursday. On Friday it went into price extreme high, but it is looking very bullish for a swing trade. So if I am going to buy, I would rather buy small cap stocks. That is a market level analysis, looking at the external view. Again, like a child, just reading the market as it is presenting itself, not trying to impose my ideas about global events, economy, recession coming or not, etc. Now let's have a look at the internal view using market breadth. The moment we look at the candle chart, there is hesitation to buy, because over last 5 days we had 3 Hindenburg Omen signal, and on Friday came the signal that is buy everything, even those of not value signal or Bango, thanks to Mr. Ian Woodward, may him rest in peace. The moment we look at the candle chart and the signals on the candle chart and look down to see if there was any accumulation, none, no accumulation at all, using the accumulation signal in Q, rather a distribution for one of the pockets during the week. No accumulation at all. Market went up and with lot of cautionary signals. These are not bearish setups. These are cautionary signals. Buy everything, even those of not value and Hindenburg omen. In the past, when we had this kind of cluster of Hindenburg omens, it did not end well. Will it end well this time? I doubt it. But whether I doubt it or not, I don't trade based on that. I trade based on actual trade setups. And there are enough warning signals to be cautious. But there is no short setup. Earlier, when looking at the market external analysis using ETFs, I said I would like to buy small caps now. And when I see the market internals, small cap versus large cap, if it tilts down, small cap is underperforming. For a long time, it was underperforming, but now it has started to outperform. The internal view is also supporting the idea that I buy small cap rather than buying large cap or mega cap. Mega cap is too extended and large cap is underperforming. I would like to buy into the strongest pocket, that is small cap at present. What about growth versus value? Growth is outperforming for a while, that is continuing. So now we are in a sweet spot for growth stock traders. Small cap growth is outperforming. Small cap growth is outperforming. That is a sweet spot. And many of these small cap growth stocks were beaten down. And that's what I mentioned in one of the recent tweets, or maybe in the last market recap, I don't remember. What kind of stocks I am buying now? They are either defensive sector stocks, dividend paying stocks, or stocks that were beaten down. And after the recent earnings, because it is earnings period, I waited for the earnings. After the earnings, it is showing some signs of life. And of course, the stop has to be narrow for the non-dividend paying stocks. For high dividend paying stocks, I may just hold them over longer period. But for not dividend paying stocks, even if it is showing signs of strength after recent earnings being battered down earlier, I'd like to have narrow stop. We'll try to find such stocks today also. But overall, for the stocks that are already high, there are enough warning signals from the market breadth chart. And by the way, the Hindenburgs here in the total view, they are shown based on a composite calculation of both NASDAQ and NYSE. Until last week, only NASDAQ had confirmed Hindenburg, but now both NYSE and NASDAQ has confirmed Hindenburg. That you could see if you drill down into the market breadth of the different exchanges, NASDAQ and NYSE. I'm not doing that, but the Hindenburg has confirmed on both NASDAQ and NYSE. Another reason to be cautious of the stocks that are already at a high level. What are other analysis telling us? Let's look at sector breadth, industry breadth. Again, looking at it like a child. Which child? Someone like this one. Just taking in the signals that are around us and reading it out without trying to filter it through my past experience or recession, world event, etc. Just looking at it as it is. What is that telling in terms of sector, industry, stock breadth? 1 month long term period is mixed. Cannot say it is bearish anymore. Until last week it was bearish. 10-day long term view, mixed. Cannot say it is bearish. 5 days bullish. So this week has turned bullish. And as I mentioned, if you watch the market breadth in real time, or after the market close every day until Thursday. The 5-day period was bearish, but Friday's bullish move, we saw IWM started to outperform. That is, the stocks that were beaten down started to outperform. That pulled up the 5-day period and turned it into bullish. And that is the kind of stock I may buy, not the stocks that are at or near all-time high or 52-week high. I may buy the stocks that were beaten down and now starting to go up. So I am not just looking at the market, but trying to find the pocket of the market where I have the low risk buying opportunities. Not stocks that are already at a very high level. I'm not chasing stocks, I'm looking at low risk buy points. And those buy setups are there. In fact, in the last market recap, if you remember, though the sector industry stock breadth was bearish, when I opened Q Finder last market recap, I was surprised to see that there were more greens than reds, and I mentioned that the stocks that were better down, they may be coming up and those may have buying opportunities. The same conclusion remains this week also. If we look at the bucket analysis, it is not overbought, not oversold as well. Not overbought, not oversold. That is, not too many stocks are above upper Bollinger Band, not too many stocks are below lower Bollinger Band. 58% of the stocks are above mid Bollinger Band, that is bullish but not overbought. So that means though SPY, QQQ are very overbought, DI is also overbought, there are pockets of the market we can see that are not overbought, and that is where I am going to look to buy. And how is Q Finder this week? Last week it was bullish. This week has turned more bullish. The weekly interval is bullish across all categories, and if I look at the daily interval, is also bullish across all categories. Also, majority of the bullish signals are coming from mid price level, not high price level, and that is also showing what I mentioned earlier. There may be buy setups that are not at a very high price level, that are not extended, not at price extreme high from this perspective. So we could look to identify breakout setups with bullish flow. We could also look for pullbacks, but of course it will be easier to find, I think, breakout or flow or combined setups. Pullbacks are less. We'll try to find probably some breakout setup. This earnings period, the earnings may result in some breakouts. That was a look at the market. Now we are ready to look at some stocks. Let's look at two stocks I mentioned in the last market recap. One was SFL. SFL was looking weak and it is remaining weak. If we look at the relative performance, it is sharply tilting down. This week tried to go up. It did go up little bit. Feeble move up. Closed with bearish color and indecisive shape weekly candle. There was no bearish setup. Not sure I remember or not. But in any case, I remember. No, sorry. I remember I mentioned that if the market was turning bearish, that would be the time to take shorts. But market didn't turn bearish. But if the market turns bearish, it will continue to give a possible short setup because it is hugely underperforming. And I found this stock using 360 degrees analysis. So not only did it come down after the bearish headwind, I'm continuing to look for short setup because technically it is weak and also fundamentally it was weak. I think industry was also weak. Just one thing is to keep an eye on the earnings date and not go and buy the stock. I don't do that before earnings, or not short the stock before earnings. If I'm trading before earnings then I use vertical trades that are defined risk strategies. But my analysis, that's credit to Q. I just applied it like a child without my own judgment. That worked out. It is relatively weaker, and if the market was going down, I'm quite sure, not 100% sure, but I'm sure enough to take a short trade on it if the market was going down last week, and I think quite sure, quite confident to take a short trade next week also if the market goes down. Of course, I'll use the real-time analysis on SFL at that time. And the stock that I considered buying last week was Harch, HTZ. And again, I mentioned I didn't buy it. I did the market recap on this day. And I mentioned I didn't buy it. I look for it to move in the upward direction before buying. And earnings is always important. This was the earnings date. This was Friday. Monday, price was going down. There was no chance of buying for swing trading. Tuesday had earnings. So in fact, I took a long position on Tuesday. I noticed that it opened with a gap down, but it recovered and went above the trend line support in daily, watermark support in weekly, creating a false downside breakout. I took a long position using stock. I have a small profit in the trade. Notice this is one of those stocks which were battered down and showed some sign of life after earnings. And what was the other requirement for me? Stop has to be narrow. I took the position when the false downside breakout was happening, so my stop is very narrow. In fact, I actually traded partly with short put, partly with stock. The short put I have already booked profit because earnings was out, it had a gap down and then started to move up. I used a short put strategy that in fact it went to I think 50-60% profit, and I closed the short put and I took a long stock position. That is how I traded it. Long stock position I am holding. If it goes below this level, I will stop out on the stock. If it starts to go up, I'll continue to hold it. Using the short put and stock together, I think I'll end up with a small profit even if I get stopped out on the stock. In any case, I took a short put here because the volatility was very high right after earnings because of the gap down. Okay, okay, I took a sip of water. Sometimes too much talking is not helpful. Sorry about the pause. Let's try to find some buying opportunities now. Because I saw small cap has more strength, this is the time to use Q index. Let's look at the Russell 2000 stocks using Q index. That is the small cap stocks. Create the constituents using real-time Q index. The graph here also shows us that gradually small cap is strengthening. It was, and it is still bearish over 1 month period, still bearish over 10-day period, but this week and specifically over 2-day and 1 day, it is very bullish. So that is the time when it is turning from bearish to bullish stance. I'm going to look to buy. That is also a kind of turnaround condition. Turnarounds almost always lead to lower risk entry points relative to breakouts. Now generating the scorecard of the small cap stocks using CubeHighter. Because there are many stocks that are bullish, and I can see the statistics, you can see it from the top. 78% of constituent stocks are up, which is 1520 stocks. So here I am going to start with Diamond. See if I have Diamond fundamentally strong stocks that are also going up. I now have 28 stocks that are Diamond, that is undervalued, with high earnings growth as well as high revenue growth. These are all small cap stocks in the sense they are Russell 2000 constituent. Some came down. I'm not going to focus on them, the three stocks that came down. Let's look at the stocks that went up and then check for stocks from Q Finder. Look them up in Q Finder. Why that is important? Because many of the Russell 2000 stocks are not liquid enough. I already ran Finder on liquid stocks, and when I look up the small cap stocks, I have only 7 stocks. What have I done so far? What have I found? Starting with about 2000 stocks, Russell 2000 constituents, I looked at the strongest fundamental stocks. How strong? Undervalued with earnings growth, revenue growth. That's a great fundamental strength to have. Then I looked for liquid stocks in them through Finder and also looked for stocks with Q setup. The top one, CLSK, Spark, already up by 32%. I'm not going to focus on that, maybe because of earnings. Let's look at the other stocks. So now see, I am having to see only 6 stocks. If I find buy candidates from here, these are strongest of the strongest in terms of fundamentals, technicals. I look at industry. If I don't find trades here, then I will go back to 3-star fundamentals, and if I don't find, then I'll go to 1-star fundamentals. That way I'm focusing on the strongest stocks first, relaxing criteria only if I need to. Let's look at these stocks. LNTH. This is a stock that has displayed a bullish headwind some days ago. It was already at jump thrust low and price extreme low. It is still at price extreme low and near jump thrust low. In fact, when I tweeted that this is the kind of stock I'm buying, I actually took a long position in LNTH. I don't remember right here or using the bullish flow that came after bullish headwind. I don't remember. One of these days, I took a long position in LNTH. That was the time to take because again, I am acting like a child. I'm just looking at the trade setups, trade signals, my preferred stocks to buy, great fundamentals and technicals. And at that time, the industry was also strong, I think. So I already took a long position one of these days. Today it is going up from the point I bought, but today is no trade setup is there, so I'm not going to buy today. This is one stock. I used the 360 degrees analysis. I already took a position in that. CNK. It has no buy setup now, so close this. AX. This one is looking good. Let's see any other stock. ALKS has a trendline resistance. Not going to buy that. BANC, Bank of California. This is also looking good. ACMR. This is also looking quite good. So you see, using very few clicks and objectively looking like a child again, I could find several buy setups. These are not only technical setups, these are the strongest in terms of fundamentals also. Let's pick at least one of them. Let's look at BANC because I see it has many trend line supports. Of course, there are other stocks also, we could look at them, but I have not so many minutes left. So let's look at this BANC. Look at it using weekly daily. I opened the commentary to see if it had a trade setup. It has no trade setup as per Q Techniques. The setup would have come 1 day ago. I am looking at the chart. 1 day ago, it bounced up from trendline support. So we could go back 1 day. No, there was no. Strictly speaking, there was no bounce setup. Why? Now, if you apply the checklist conditions, it bounced up from trendline support. But the other required condition for a bounce setup is that it has to have high volume or bullish pressure or some kind of bullish momentum. That was not there. But fundamentally, it is very strong. Technically, it has support nearby. So I am not averse to taking a long position provided its industry is strong. That is one thing I would like to have in my favor. I never ignored the industry. As I mentioned sometimes, at the very top, if I am shorting, I may ignore the fundamentals, but I always try to take the industry in my favor. So this is a bullish trade. Let's look at BANC's industry. Bank of California, let's generate a single stock scorecard first to see how the peers are doing. Difference between New York and California, isn't it? And bank in New York had some trouble, but this is a Californian bank. It's not, of course, to generalize between New York and California. Very strong stock. Instantly, by looking at the scorecard, we know great valuation, high earnings growth, high revenue growth, Funds are buying, insiders are bullish. If you want to put weightage on them, analysts are bullish. Great earnings quality, short squeeze potential, even a 3% dividend yield, profitable bank. Earnings is already over. Next earnings date is 18th April, far away. 88% of peer stocks went up on Friday. That's a stock to buy in terms of fundamentals. No questions asked. Difficult to get a more bullish fundamental than this, certainly in a bank. 88% peers went up. Let's see its relative industry score from QH. As good as we could wish for. Top 20% in terms of strength, top 20% in terms of acceleration went up by 1.9% on Friday. So that is the way I look for stocks in any market and also in the current market. Only difference is in the current market I am cautious about buying stocks that are already at a high level. So I looked for stocks that are not at high level but great fundamentals. In this case, nice to have a 3% dividend yield in a very strong industry. That is a 360 degrees buy setup. And one requirement I always have is a narrow stop. Stop will be, it's better to put the stop below the second daily trend line support, which will also mean a breakdown below the weekly trend line support. So this is the stock I'd like to buy. There are other buy candidates. We saw there were several other good looking stocks, even from the diamond fundamentals, but I'll not go through all of them. That is the secret of my trading success, which tends to be slightly more profitable in terms of success rate than many other traders, because I look at the market like a child, not try to impose my judgment, not look at market events, don't look at macro events, just look at what the market is doing, but look at it from enough number of dimensions using the best quality of data that is possible, that is Refinitiv data, highly reliable, and come to a conclusion first on my preferred trading direction, which may be different from market direction, not this week, but sometimes it can be. Then look at strong industries, strong fundamental stocks, then look for a low risk buy point. And the workflow can be different. In this case, I started with small cap stocks using Q index. Then I looked at their technicals using Q finder, then looked at fundamentals. Sorry, I looked at Q index, small cap stocks where small cap pocket is outperforming, looked at the fundamental scorecard, took the diamond fundamental stocks, looked at the technical signals, looked at full of charts like BANC, Bank of California, confirmed its industry strength. That completes the 360 degrees analysis. The workflow can be top down, bottom up, or a middle of the way as I carried out this week. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as this live session show, there is no reason not to do that. Be like a child, read the signals, follow the market, and trade profitably. Thank you.